Last Thursday's sell-off has put high-frequency trading in the spotlight. With us now is Arzhang Kamarei. He used to be a block trader with Goldman Sachs, has years of experience with high-frequency trading. He is now a managing partner at Thesys Technologies. Arzhang, always glad to talk with you. Thanks so much for coming in. You were on the floor. You were trading at Goldman, actually, April 4th, year 2000, and you say, or April 9th, rather, you say it is exactly like what we saw on Thursday, but with a few key technical differences. What were they?
Well, what was interesting and what was similar about the two is both were days where there was an enormous amount of selling pressure. Markets traded down and then completely or almost completely recovered their losses. In the case of April of 2000, it was about a 15% move down in the NASDAQ that was quickly recovered. The difference is now we have technological tools that could have prevented some of the problems that we saw. In some cases, they were applied, but in all cases, they weren't. And so we're certainly in a better position to try to deal with these types of situations where these volatile sell downs and rebounces. But unfortunately, it wasn't a coordinated enough effort this time.
So before we dissect Thursday's perfect storm, I mean, more than 60% of U.S. stocks are traded electronically. But there seems to be even confusion in the definition between what is electronic trading and what is high-frequency trading. Why is this such an important distinction to make?
Well, what's important to note is that every single trade done in the U.S. today is an electronic trade at some point. They all pass through the matching engines of the different exchanges. Now, what's interesting is that long-term investors also trade against high-frequency traders, but they both do it electronically. You can't just single out the high-frequency side, and you have to realize that both sides are using this technology, and they need to be using it effectively. Otherwise, you could have complications. Now,
we saw with the New York Stock Exchange that they actually had their limits hit on Thursday. Some of the other exchanges continued. I mean, is there anything significant in that the NYSE has that supposed hybrid system of man and machine?
Right. This has been an issue that that people have been really focusing on, and the main question is, has a lack of coordination in the slowing down on the New York Stock Exchange caused problems in other markets where orders may have been routed away at very aggressive prices and caused a potential meltdown in certain stocks?
So is Thursday, I mean, can you make the argument that Thursday is the proof that we need more human interaction or less?
It's a good question. I think Thursday is proof that you need a lot of things. Certainly you need human intervention and watching over the electronic systems to make sure that everything is operating smoothly. But you really need human intervention in designing better technological tools that can act as circuit breakers to prevent this. It's really a mixture of human beings and technology, and it should be.
Now, kind of getting back to this perfect storm, I mean, as you said, the markets were jittery over Greece. You feel like the technology is still not as advanced as it could be, and those are the two major factors that contributed to Thursday's glitches.
Yeah, I think the sell-off has to be seen in the context of a panic that Greece could go bankrupt or could default, and already the markets were extremely nervous. Now, there were some very, I think, probably poor choices made in terms of some of the uses of technology. For instance, sending market orders or having stop-loss orders with market limits can really be a dangerous way to try to get your trading done in the marketplace.
Arzhang, I mean, you've seen a ton of experience with high-frequency trading. You've been in the business for a while. I mean, does the future of Wall Street look more like Silicon Valley?
It's starting to look more and more that way, but I think you're seeing that across all industries. I think it is a good trend, but certainly there needs to be a lot of focus on how we can make trading systems be as effective and as safe as possible.
All right, Arzhang, we thank you so much. Arzhang Kamarei joining us there. He is co-founder and managing partner of Thesys Technologies.